Well, Shiv Puri is now joining us. He's founder and managing director at TVF Capital Advisors, and he's with us on the program. Shiv, great to have you with us here. Thank you very much. Appreciate your time here on CNBC-TV18. It's been a while, so welcome back. Just tell us, I mean, last we spoke, which is some time back, you were extremely bullish on the entire financial space, Shiv. That was the number one holding for you by far. How have things changed? What have you been doing? How's the year been so far for you guys? And what's the view from here?
Well, I think compared to the last time we spoke, a few things have changed structurally first. One is that I feel this is a period we're entering, which is sort of the 2003-2004 era in terms of capital flows, which is going to likely to be more structural and I'm meaning talking about foreign capital flows. So we could have a period of the next few years with strong foreign capital flows and continued strong domestic capital flows, which would be a very interesting position for the market. I think the second thing is, from the last time we spoke, is balance sheets across corporate India are the best one would have seen probably in the last 20 years. And it's not just for corporate India, but even for all the financial institutions. Clearly, they're over-provisioned during COVID, expecting worse things to come. That hasn't happened. And so as a result, the ability for corporates to invest and for the banks to lend has never been better. And then finally, when you overlay valuations, which certainly in the larger names look reasonable, I think you still have a background of a healthy environment for equities going forward, barring any big global issues, which are always something of concern.
Sure. Shiv, hi, good morning, and thanks for joining us. It's been a while since we've, seen you here on the channel. So hope to see you here more often. In terms of individual pockets, right? I mean, it's become a little difficult to generate alpha in a market like this where valuations are at a peak for many sectors. How are you looking at that? And where do you still see both growth as well as valuation headroom?
Well, I think as a sector as a whole, certain valuations are extended. But I think in some areas of, say financials, for example, when you're looking at perhaps even the largest private sector bank in the country, it doesn't seem that the valuations are that extended. And, if we're entering a period where the economy is going to grow at 6 to 7% real, you're going to have nominal growth in the double digits. There is still a very strong runway for credit growth in the country. And like I said earlier, asset quality remains good. Valuations are very reasonable, in line with the kind of growth that they're going to have. So I think there are pockets of opportunity like this. There are certain areas. The areas that I'm a bit more worried about are slightly on the mid-cap space. There are companies out there that have pretty extended valuations. Competitive pressures are building up. Capacities will come online. But I think in certain areas of financials, certain areas in healthcare, for example, certain large chains in hospitals, I think have a very strong structural opportunity over the next 5 years.
Hi, Shiv. Good morning. This is Nigel on this side. There are a lot of good domestic themes that are playing out there. How are you all focusing on it? Is it the real estate space? Is it infra, cement? I mean, what's your pick?
I think infrastructure and real estate and utilities has been an area that's always been a little difficult to navigate. And if you actually look at the wealth creation that's happened over the last 10 or 20 years, very few companies have delivered the kind of returns on a structural basis. I think on a cyclical basis, you're going to see some of these things move up, just given what's happening both in private capex as well as in infrastructure spending. You're seeing order books fill up. You're seeing, like I said earlier, capital availability. But I think, there are still opportunities predominantly in financial services and pockets of consumer, in some areas of healthcare, especially in hospitals. And then in certain, IT names that still have a structural tailwind behind them, but perhaps have a cyclically challenging period over the next few quarters.
So what would that mean when you say there's a structural tailwind and cyclically challenging period for the next couple of quarters in IT? Do you like them? Do you not like them? Because some of these stocks have, pulled back quite a bit. I mean, Tech Mahindra is up almost 10% from the lows in the last 1 month.
Yeah, they have. I think, cyclically, what you're seeing is that there is a tightening of budgets in the US for spend. You're seeing projects get delayed. You're getting sales cycles elongate. But structurally, with the whole navigation of AI that pretty much all the big companies have to go through, you're going to rely on more customization. You're going to rely on more technology depth. And the Indian IT services companies are no longer just, passive partners in this process. They have actively helped all of these Fortune 500 companies navigate onto the cloud and are best positioned for the next level of migration that will come. But that will span out over the next few years, which means that there could be some really interesting opportunities come over the next few quarters.
Shiv, so let's just narrow it down, right? So top bets really for 15-20% kind of 15%. Let's be reasonable. Compounding stories from here, according to you. I mean, list out a few names if you can. That'll be lovely. Otherwise, the closest you can get.
Well, I think it'll be difficult for me to do that without compliance. But I would say that in terms of sectors, financial services still remains that way. And nothing has changed over the last couple of years. You've seen the best lenders continue to grow their loan book, earnings, and correspondingly stock prices. And so if you look at some of the largest private sector banks, some of the smartest lenders in consumer lending in the NBFCs, some of the home mortgages who run a sensible book, penetration levels are still so low. We've still got a very, very long runway over there. So I think...
Shiv, let me just come in there. Just a thought that I'm going to borrow from what you said just a while back. You said, well, with infra and real estate, you kind of said that over very long periods of time, there have been few winners, right? In that sense, I mean, not structural. You get these cyclical, very sharp moves. Can one say the same thing about banks? I mean, if you go back the last 20 years, have there been lots of, what's been the strike rate? I mean, if you take a bunch of banks, top banks, how many have structurally made money? I mean, you can count them on fingertips, say an HDFC Bank and maybe... so doesn't the same apply? I understand the fundamentals, but using what you just said about real estate and infra. Go on.
Well, I was just going to say that the number of infrastructure and infrastructure-related companies has been humongous over the last 20 years. The number of private sector banks in India is a handful anyway. And of them, 4 or 5 have created immense wealth. There have been a couple that have had credit issues, but even some of them have bounced back. So I don't think we can really compare the two sectors because obviously banks, it's a regulated business. You have to have a license to be a bank. And there haven't been that many licenses that have come out.
Yeah. No, I was not comparing, and not at all. I mean, there's no comparison. I was just saying, you go fishing where the fish are, right? I mean, in that sense, just to use that phrase. So yeah, financial services, private banks, top of the list. What else? Number 2, number 3.
Well, I'd say that would be at the top of the list. I think the second area would be hospitals in India, especially those of scale. Mm-hmm. Because what we're starting to see is post-COVID, people are taking their health a lot more seriously. You're seeing life insurance patients, which used to be a very small proportion of our hospitals' incoming patient list is now rising quite dramatically. You're seeing people navigate and move towards branded hospitals. Earlier, they used to follow a doctor around. So we're seeing sort of some structural changes that are happening over there. And look, healthcare in India at the top private healthcare in India is still reasonably cheap compared to anywhere else, even in the emerging world. So I think there's also a lot of pricing that will come. Of course, the risk in hospitals is also always regulatory. But what we've seen post-COVID is actually a regulatory tailwind for some of these hospitals than rather a headwind.
Okay, all right. We'll leave it at that, Shiv. Thanks a lot for joining us. In fact, a lot of these hospital companies, even for, on the stock exchanges, have done exceptionally well. I mean, we just spoke to Yatharth Hospitals. They have very good, almost 40% revenue growth. The stock is up about 6%. So I take your point that, this is a space that is picking up quite
Just a
well.
bad joke I wanted to make, Sonia. Disclaimer. I mean, if you go to Shiv likes private banks and hospitals. If you go to a hospital, you need to go to a bank.
Hopefully,
Unless you have insurance, which is the third leg, which I think Shiv mentioned. Shiv, if you're hearing, thank you very much once again. Appreciate your time here on CNBC-TV18.